Welcome to Striking Options, the show that reveals the options you have to better navigate markets. I'm Jeff Kilburn. We've adjusted our show until we get back into the studio. I'm joined today by Scott Barr. Welcome, Scott.
Jeff, how are you?
I'm doing great on the last day of Q2. Get really excited, but I want to talk about two topics today. I want to have an end of quarter equity review, but I also want to talk about a dear old friend of ours, Dr. Copper. Does that sound good?
Absolutely. Let's do it.
Well, let's dive in. This has been the best quarter for the S&P 500 in decades. Actually, the best quarter since 1998. Certainly, it's in the wake of the month of March where we saw the largest drop in the history of the stock market, a 35% drop, the quickest 35% drop. But let's talk about what happened in Q2 and what are your expectations for Q3?
You know, Jeff, I think so much of it just comes down to COVID and what happens with the reopening. You know, we kind of know what the Fed's program is about them wanting to buy, really backstop the economy. So I don't see many changes there. And I really think that it all depends on what happens with the COVID situation.
I think that's right. And another nuance for all the folks out there who like to lean on technicals, if you look at the E-mini S&P 500 futures contract, you have seen a continual retest of the 50 and 200-day moving average over the last couple of weeks. I think that's really constructive that we've stayed above those moving averages, and therefore there could be a potential grind higher, Scott.
No doubt about it. I was going to mention that. I mean, 2 or 3 times we hit right on that 200-day moving average that you had, just talked about, Jeff. So yeah, a grind higher could be in the cards.
And when we talk about the E-mini S&P 500 futures, copper futures, there's certainly a correlation. But let's talk about Dr. Copper. It's been pretty sensational to see, and copper's actually poised for its best quarter since 2010. And certainly that's being helped, Scott, by a lot of optimism over strong and expected demand when we see Asia and China reopen. But let's talk a little bit about Dr. Copper as we see at the higher end of its trading session, looking at $3.
It really is. And ever since the reopenings have started, starting in Asia and then, over to us, we have seen that demand pick up. And you look at the charts and, copper is making higher highs, higher lows on the way to that $3 level you just talked about.
Yeah, it's just interesting to see the demand when we talk about how copper is utilized in automobiles, electronics. We've seen like a 21% surge just this quarter. But I think it all is correlated to how not just domestic, but as these global economies reopen, we're seeing closings after reopen. So it's going to be challenging to measure and gauge. But nonetheless, Dr. Copper is helping us understand what that demand picture looks like. And there is that correlation to the equity market, correct?
Absolutely. There's no question about it. I mean, it's pretty tried and true. And, if you look at the recovery that copper has made, it really is almost lockstep with the equity market.
Well, Scott, we want to thank you as always. We want to thank you for tuning in to Striking Options. Please tune in every week as we will continue to strike options.